Hi guys, and welcome back to FutureFunded. Today I'm going to be going through something slightly different. I'm going to be going through the psychological aspect that allowed me to pass all of my accounts with FutureFunded, both on FX and futures, and it's allowed me to become consistent right the way up until this point, simply because I followed this methodology. So I'm going to get into it now. Let's go. Right, so one of the main things that I always look at, or one of the main things that I should say that I've always implemented up until the point where I truly learned it, was there's two sides to trading, and I like to split it in two. You have your strategy and you have your gut instinct. This is where I just normally keep this separate to one side. Okay, your strategy is everything that you know you should be doing. Your gut instinct, in my opinion, backs up your strategy, because your gut instinct is based upon your experience, your time, your hard work, your back testing, your data, everything all combined into one. But then you have something else, and that something else is probably, in my opinion, the key thing that kills most traders' ability to be consistent, and that is your opinion. Your opinion, I don't care what anyone says, is the very thing that stops you from being consistent, because your opinion is the only thing that can override your rules, your strategy, and your gut instinct. I'll give you an example. Let's just say, for argument's sake, you want to take a short position right here. Let's just say, for argument's sake, that was a long, so I'll put a short in. Yeah, let's say you want to go short here. Okay, now the reality is your strategy is telling you to take a short position down to here. You've got 6 confluences. That's enough confluences to enter that trade. It's the right time. You've only taken, or this would be the first trade of the day. Everything is aligning. Okay, you've got every single element from higher time frame structure right the way down to 1 minute, 5 minute to enter this trade. But the only thing that's stopping you from doing it is the fact that you just don't like it. Now, some people would sit here and say, okay, well, I don't like the trade, I don't feel comfortable, so I'm going to stay out. In my opinion, that is a complete wrong way to look at it, because then you're allowing your opinion to have its own power. All right. So what naturally then happens is you end up missing the trade. It then ends up going in your favor. And then you sit there asking yourself, why didn't I take that setup? Well, you didn't take that setup purely because you felt uncomfortable and it didn't look how you wanted it to look. But just because a trade or a setup doesn't look how you imagined it in your head doesn't mean that it's not your edge. It just means that it looks different. Every moment in the markets is unique anyway. It's supposed to look different. The fact that you won't allow yourself to take it, or you're allowing your opinion to override your strategy, is the problem. It's not the trade, it's you. All right, it's very clearly you, because your strategy up until this point is a tested, back-tested set of rules, set of data that up until this point shows itself to be consistent and provides you proof of concept that at the end of 20 trades, 30 trades, 40 trades, 50 trades, it will make money. But the only thing that's going to stop you from taking that edge every single time is whether you like the trade or not. And that is your opinion. Okay? Most opinions are flawed. Let's be realistic. Most opinions are flawed. How many times in your life have you had an opinion that you no longer agree with and you've completely changed your opinion today? I know I keep using that word, but it's relevant, right? Opinions are ever changing. A strategy is designed to work over the long run, and it's not factual, but it's data that's backed up, and it's proof that something works and that you have an edge in the market. Your opinion is not proof of anything. The market doesn't care about your opinion. Doesn't even know what your opinion is, doesn't even know who you are. So if you're not taking trades because you don't like the look of it, but it's your edge, then guess what you're going to do? You're only going to take trades that you like the look of that probably aren't going to be your edge. That's just a simple reality of it. You must get comfortable with feeling uncomfortable, and you must get comfortable with being in uncomfortable situations. Market conditions are uncomfortable. You are supposed to take trades that you don't think are going to work. That's the whole point of trading. Trading is not just about taking trades that you guarantee yourself you're going to win. Trading is about taking a setup that hits and clarifies all of your rule sets and that hits your trading plan. It might not look how you want it to look, but if it ticks your trading plan step by step, you must take that trade. It's as simple as that. You must take that trade. If you don't, like I said before, you're only going to end up taking trades that you like the look of. 9 times out of 10, those trades won't be your edge. And then you'll sit there asking yourself after the event's happened, and you'll say, well, I was missing this confluence, this confluence, this confluence. So you're happy to skip all of those confluences just to take something that looks nice, but you won't take your edge just because it doesn't look nice. In order to get to the end of a 20 trade sample size, you have to stay in that flow of random distribution. What I mean by that is you have to stay in that flow, consistently taking your edges day by day. Now, in order to do that, you have to have a very rigorous, a very well-defined, strategic, systematic strategy and plan laid out that doesn't rely on your opinion and your subjectivity. It only relies on you being objective and saying, does this hit X, Y, Z? If it does, I will take the trade. If it doesn't, I will stay out. Not, oh, yeah, price has moved up to this area. It's moved a bit higher than I wanted it to. It's gone up a bit too high, so now I'm not going to enter. You see what I'm trying to say here? Your opinion's overriding and clouding your judgment. All right, and this is one of the very things that I had to learn the hard way, because I'm not acting like I'm a saint at this. I spent years going through this very, very problem. And it was years, and it did take me a long time and a good mentor to kind of snap me out of it. And it isn't by the way, it isn't a thing where you can just snap out of it like that. It does take time, it does take practice, it takes self-awareness, it takes journaling, it takes having the ability to be accountable for absolutely everything that you do leading up to the setup. You have to apply full focus, you have to have a good routine, you have to be organized, you have to be everything that you need to be and that you should be leading up to that setup, so that you can execute flawlessly, without emotion, without opinion, and just focus on that systematic, robotic approach that your trading plan creates for you. If you're not willing to do that, then you're always going to allow your opinion to cloud your judgment, which means you're only ever going to take trades that you like the look of but aren't your edge, and ultimately you are only ever going to consistently lose. Okay? If trading was that easy, we'd all do it. The reason why good traders are good traders is because they are able to be comfortable in uncomfortable conditions. That means they don't care what the trade looks like. If it hits their edge, they will take it regardless of whether they think it's going to work or not. I can count a number of times where I don't think a trade's going to work and I will still take it anyway because my plan tells me to. And I know that if I don't, I will feel far more frustrated at the fact that I haven't taken it than I would if I did take it and it lost. And by the way, guys, the number one thing you must do if you do actually take this leap and start applying yourself and doing this, if the trade does lose, let's say for example this one, if this does lose and it goes in your favor and then it loses like that, don't then tell yourself after, oh, I told you so, because again, you're just giving your opinion power at that point. And then what will happen is tomorrow you'll see a similar setup, and then you won't take it again purely because yesterday you decided that you're no longer going to do that because your opinion is what matters. And then today or tomorrow, let's just say, now it goes in your favor, now it works perfectly, now you're in the same situation. Do you see how it can just spiral out of control if you don't focus on the right things? So I hope you found that helpful, guys. I hope you found that useful. And as always, make sure to like and subscribe for more content and more educational stuff.
So there you have it, guys. I hope that helped. As always, make sure to like, comment and subscribe if you want me to make more content. I'll be doing more educational stuff, but most importantly, make sure to go to FutureFunded, get your challenge, and I will see you inside.